that is a sign of easy money. So the fiscal, position is deteriorating rapidly for the United States. And the reason they're cutting now is because the economy can't handle next recession, which may have already started.
Gold is skyrocketing, but you wouldn't know it from the silence in the media. Peter Schiff uncovers the untold story of why central banks are quietly stacking gold, even as the public sells it off. The U.S. economy is teetering, the deficit is exploding, and the dollar is weakening fast. Peter warns that the next recession is closer than you think, and the smart money knows it. Want to know why the biggest players are choosing gold over U.S. dollars? Watch now before it's too late.
I don't think most people have already shifted their attention, at least not in the West, certainly not in the United States. Interest in gold is still relatively low. I mean, you would think that the phones were ringing off the hook at my gold business at Schiff Gold. It's business as usual over there.
Really?
There's no media attention. I mean, I watch sometimes I go on CNBC on days that gold makes a new record high, and they don't even mention it. And I'll see the gold mining stocks and silver stocks as the best performing sector. And when they go over the sectors that did well that day, they don't even mention precious metals mining. So it's not getting any media coverage. The public is really not there. In fact, the public has been net sellers. Look at the GLD, the big ETF. They've had net liquidations all this year. So the public is getting out of their gold, even though the price is going up. We know the economy is weak. I'm sure jewelry sales are down, so people are buying less gold jewelry. So why is the price of gold going up? Because central banks are buying it, and they're not the dumb money. These guys are making decisions, calculated decisions, as to what asset they want to hold. And they're mainly choosing between US dollars and gold. And they're foregoing the interest they can earn on those dollars, and they're buying gold for a reason. Right? They know what's going to happen to the value of the dollar because the deficits are in the process of going ballistic. We're adding now $3 to $4 trillion a year to the national debt. And that's going to accelerate during the next recession, which may have already started. I've been arguing we've been in a recession for some time now. It's just that the official statistics don't acknowledge that fact, but they may be revised to admit it at some point. But that's probably one of the reasons that the deficits are skyrocketing. In fact, we just got the I think it was the July deficit or the August deficit came out last week, and it was the biggest August ever, including 2020 for 1 month. So the fiscal, position is deteriorating rapidly for the United States, and that's probably because the economy is much weaker than the statistics, and that's why the government is not collecting enough in taxes, and its expenses are going up. So I think the dollar's days are numbered. I mean, look at it; it's almost it's at a 13-year low against the Swiss franc. No one really talks about that, but we're close, about 7% below an all-time record low for the U.S. dollar versus the Swiss franc. The dollar had been strong against the yen, but that's reversed recently, and the yen is trading at near its highest level of the year now. So that we're starting to see cracks in the dollar. I mean, maybe once the Fed cuts rates tomorrow, and it's a foregone conclusion they're going to cut, all they're arguing over is the size of the cut. Is it going to be 25? Is it going to be 50? I don't even think it matters. In the scheme of things, any cut is a mistake. The Fed should be hiking rates. They never should have stopped hiking. They only did it because banks started to fail. And the reason they're cutting now is because the economy can't handle these rates, even though they're actually low. Rates never got high. That was just a lie. The Fed never got to restrictive territory. You know that because a savings rate is at a record low. Credit card debt, household debt's at a record high. That is a sign of easy money, not tight money. When the Fed is restrictive, people save. They stop borrowing, right? But the government's cut back on their spending when the Fed is restrictive. The Fed never got the government to do anything, but they just kept on borrowing and spending as if interest rates were still at zero. They haven't cared. So the Fed hasn't moved the needle at all on demand, really. And so inflation is still a big problem. But when they start cutting rates tomorrow, it's going to reaccelerate inflation to the upside, which has been basing now over the past year officially at about 3%, which means unofficially it's probably 5 or 6%. But then once they go back to the rate cuts, I think that it's only a matter of months before they go back to QE, because I don't think the rate cuts are going to work. I think the economy is going to keep weakening. And what I think is also going to happen is that long-term interest rates and mortgage rates might actually go up after the Fed cuts rates. And now what's the Fed going to do? Because that means the lower interest rates aren't helping Americans who are borrowing. We know credit card rates are at a record high right now. They're not going to go down when the Fed cuts rates. Why? Because delinquencies are rising. The credit card companies can't cut rates. Doesn't matter to them. When they're charging 20%, doesn't matter if the Fed is 5% or 4%. That's irrelevant. Their interest rates are a function of losses of the people who don't pay. That's what they have to get from the people who pay all the losses from the ones who don't. And more people are not going to pay their credit card bills because they're broke. So credit card debt, I don't think you're going to see much of a reduction in auto loans. I don't think we're going to have any real reduction in mortgages. But even if the Fed cuts mortgages, it's not like even if mortgage rates go down, it's not like we're going to have a big wave of refis. Because even if they go down, they're not going to go down low enough to let people refinance, because everybody's already got a rock bottom mortgage. So they've already played that card. They don't have it again. So this is going to be a brutal recession, but the Fed is going to go back to QE, and that's what's going to reignite inflation. The dollar is going to tank, and then gold is just going to go ballistic. And we've just seen, the tip of that iceberg as far as where gold's going to be. We already have elements of price controls right now. We're talking about the Fed and interest rates. The Fed controls interest rates, right? They set a price for interest. So that's a price control, right? Price controls is when a government entity comes in and says, this is the price. As opposed to capitalism, where the market discovers the price, right? No one individual or group of individuals determines, how much something should cost. It's supply and demand. The market is what determines the price, and that is efficient, right? That leads to an equilibrium price. You don't have shortages, you don't have surpluses, and it also makes sure that resources are allocated towards their highest and best use so that we maximize our standard of living, right? So that's the beauty of a free market economy. But when you have a command economy, a central planning authority that tries to decide what prices should be, they never get it right. Right? It's impossible for one person to know what should bread cost, right? What should corn cost, what should oil cost? Who the hell knows? Nobody knows. The market has to figure it all out, right? Based on everybody's own preferences, and the supply curve and all that stuff happens, and you get a price. So we have some price controls now. The Fed setting interest rates too low. Well, what does that create? A shortage. Shortage of what? Of savings. We don't have enough savings. And it creates a surplus of debt. Because interest rates have been held too low, we have too much debt, right? We have a lot of debt. We don't have enough savings. That's because of the Fed controlling interest, the price of money. We have minimum wage law. That's a price control, right? The government says, this is the minimum wage. You can't hire somebody for less than that, right? And what it says to a worker, if you want to get a job, worker, you can only accept a job if you're willing to convince the employer to pay you the minimum wage. If he's not willing to pay you that much money, if he's willing to pay you less, you can't take that job. It's illegal for you to have a job. And so what does that price control do? Well, the government has set the price too high for some people. For some people, it's irrelevant, right? If you're a highly skilled person, the minimum wage is irrelevant to you because you're making so much more than a minimum wage that it doesn't affect you. But let's say you're unskilled, and so you have a very minimal benefit that you can offer an employer. You get priced out of a job because the minimum wage is above your productivity level. And so what happens is we have a surplus of workers. We have a lot of unemployment because of the minimum wage law, right? But now what they're talking about is broadening price controls, not just on a minimum wage, but on goods. In fact, what Kamala Harris talked about initially was groceries, right? She's complaining that the price of food has gone way up, right? And she's had a big role in that as part of the Biden administration. But food prices didn't go up because greedy grocers gouged their customers. They were gouged by the government. They were gouged by the Fed. The government raised the cost of all their items. The grocery stores just add like a 1 or 2% markup. They've got the smallest margins of any retailer. So they're the victims of inflation, just like their customers. They would prefer not to raise their prices, but they have no choice. If they don't raise their prices, they have to shut their doors.
Thanks for watching. If you found this video insightful, don't forget to like, hit that subscribe button, and turn on notifications so you never miss a crucial update. Want more in-depth analysis on gold, the economy, and what's really happening behind the scenes? Check out these videos next, or for more exclusive content. Stay informed and stay ahead. See you in the next one.